You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
Welcome. You are listening to and watching the Financial Survival Network. I'm Kerry Lutz. Well, you probably heard about the new Biden tax plan, which seeks to take all producers, evidently, and drive them into oblivion and turn everybody into a government beneficiary of the government's largesse, just looking to get more and more of you hooked on the stimmies, hooked on tax transfer payments, anything, what they say, the government, if you're in the class of people who they want their votes, there's literally nothing too much. They can't do enough for you, literally. Whereas we in the production or the producing segment of the population, again, they can't do enough for us, and they don't. So, well, with us now is tax expert Dan Pilla. Dan's site is Tax Help Online. And Dan, what's your take on the Biden tax plan? Oh, before I forget, I'd like to know your opinion. Send us an email to kl@kerrylutz.com or leave a comment below. So Dan, it's great to have you back. What's up with this plan?
Well, first of all, Kerry, thanks for having me back. It's always my pleasure. I enjoy our conversations immensely, so thanks for having me back here. The short answer is you're exactly right. They're determined to destroy the productive element of our nation. That the folks out there that produce the jobs and generate the income and create the wealth, that they're just determined to rub that out of existence, Kerry. I mean, we've got in every sense of the word, we've got a government right now that's controlled by leftists, and by that I mean those folks that want to destroy free markets and want to create a socialist system. And I'm not talking about just a welfare state. Americans confuse, Kerry, the idea of a welfare state with a socialist state, and they say, well, you're opposed to socialism, but look at Social Security, what a great program that is. Well, never mind the merits of the program for just a second, but the fact of the matter is that Social Security is a welfare program. It's not necessarily indicative of a socialism or of a socialist country, right? Or a socialist program. It's a welfare program. When I talk about socialism, I'm talking about total government control of the means of production. That's what I mean when I say socialism. That's the definition. The economic definition of socialism is government controls the means of production. There is no private sector that produces anything other than through government direction and control and usurpation. That's what they want to establish, Kerry. They want to destroy private enterprise. They want to destroy free markets and create total government control of the means of production. It's the Marxist model. And this tax plan goes a long way toward doing that. There's just no question about it.
Yeah, do you think it's going to pass?
I think certainly segments of it are going to pass, Kerry. There's no question about that. They're going to get the IRS more money. Okay, the Biden administration requested a 10% increase in the IRS's budget, which is a huge increase in any 1 year for any government agency, and they're going to get that. Ironically, Elizabeth Warren's wealth tax bill, which was introduced into Congress a month ago now, I believe, a month and a half ago, she called for 100% increase in the IRS's budget, a doubling of the budget. So is there going to be some compromise between a 10% increase and a 100% increase? There very well may be. We're seeing all of this hoopla now about the government needing more money to go after the top 1% of income earners. And this is what the Biden administration is talking about. And there's some senators out there now talking about this right now. We got to go after this 1%. The IRS needs to gear up and and go after the 1%. Well, okay, fine. But Kerry, there's not enough money in the 1% segment of the American economy to make up for all of the spending these people have done in the last 14 months. We've added $6 trillion to the national debt in just the last 14 months, and they're only getting started with this. They're just warming up.
Yeah, they don't seem to care. So how do you protect yourself short of moving to Puerto Rico or expatriating?
I'll tell you what, I had this very conversation with a client yesterday that says, he was considering the possibility of perhaps expatriating, which I just, first of all, that just rubs me the wrong way, just as a matter of principle. It is a very, very serious thing to give up your U.S. citizenship. There was a time when citizenship in the United States was the most valuable thing you could have, and perhaps that's diminishing now. I don't know, Kerry, but the fact of the matter is there's still desperate people from all over the world coming to America because it's still the best. Even as bad as it's getting, it's still the best place in the world to live and to take advantage of the opportunities versus what's out there in other countries. I just don't know where else you would go. All right. So from the standpoint of principle, I think that's a bad idea. From the standpoint of economics, when you expatriate, man, there's all kinds of tax considerations and tax consequences that kick in, not the least of which is you are taxed on all of your capital assets as if they were sold in the year that you expatriate. So if you've got a business, if you've got stocks that have grown over the years, if you've got your home, of course, all of these things get taxed immediately as if you sold them in the year of expatriation. And so it's not a decision to be taken lightly by any means. You got to be very, very careful about that decision to expatriate. As I said, my knee-jerk reaction to that is not to do it.
All right. So what about a move to Puerto Rico?
Well, Puerto Rico is a U.S. possession, and they've got a U.S. income tax system that exactly mirrors our income tax system. So I don't know from a tax standpoint whether that does you any good. If you love the sun and the surf, that's one thing. Puerto Rico is certainly a great place for that. But again, it's the tax system mirrors ours, so I don't know what you gain.
For under Section 20 and 22, some law they passed like 6-8 years ago, if you move there and you set up your business there and it derives all its income from outside of Puerto Rico, you get a 4% tax. And your capital gains, I don't think you get taxed on capital gains, but your basis is the day that you move there, what your assets were worth. So there's some major tax benefits to Puerto Rico.
Well, yeah, and I'm sure that's true, Kerry. My handicap is I am not an expert on these what you might call offshore foreign tax. Of course, Puerto Rico is not foreign, as we know, but it certainly is a different bit of a different tax system. It mirrors the United States, but as you say, there's some benefits there, and I'm just not an expert on that stuff. Where my primary expertise lies is in IRS problems resolution and tax litigation, and so that's I just don't get into that planning aspect of it as much as some other folks might.
Understood. So you think there'll be more demand for your services?
Don't just survive, thrive. The Financial Survival Network.
Today's show is brought to you by Mustango River Resources. Their flagship projects are located in Kirkland Lake, an established gold camp that has historically produced over 70 million ounces of gold. The Kirkland West project is a high-grade gold project beside Kirkland Lake Gold's world-class Micasa gold mine, one of the highest-grade mines in the world. The Umeja project is an advanced stage project with 600,000 plus ounces of gold along the Cadillac Break, 25 kilometers east of Micasa. Their projects have the potential to transform into another world-class mining camp in the Kirkland Lake District. Make sure you go over to Mustango.com. That's Mistango.com. Take a look and sign up for notifications. Stock is traded on the Canadian Stock Exchange, ticker symbol MIS. For more information and to sign up for notifications, go to Mustango.com.
This is the Financial Survival Network, the information you need to thrive now more than ever.
Oh, there's no question about it. I mean, just last year alone, you got over 74 million people, I don't know if it's 74 is the number, but over 70 million people that received unemployment compensation at some level. And most of those folks don't realize that unemployment compensation, at least until recently, was fully taxable. And most people are confused about the recent tax law change now, Kerry, with respect to unemployment compensation. People now think that no unemployment compensation is taxable, and that's not true either. All right, so the law that passed, I believe it was March the 11th or 12th, Biden signed it into law that now excludes the first $10,200 of unemployment compensation from taxable income per individual for folks that have earned under $150,000. Okay, fine, that's some relief, but there's a lot of folks out there, Kerry, that got a heck of a lot more than $10,200 of unemployment compensation, and they're going to owe tax on that money. And I just read a survey here that was done by I forget who did it, but they surveyed about 1,200 taxpayers, and they found that for those folks that will owe more than $3,000, they don't have the money to pay it. We're talking about 29, almost 30%, right? So just about a third of the taxpayers that are going to owe money to the IRS, and the average amount that's owed typically is about $3,000. They don't have the money. They don't have the $3,000 to pay the IRS. So now that means the agency is going to be in their face with their heavy-handed tactics to collect the money.
Wow. What other pitfalls are there from all the stimulus that came through that you probably aren't aware of?
Well, one thing that people need to be aware of is with respect to these PPP loans. PPP loans were very helpful for a lot of folks, Kerry, no question about that. And if you did it right, if you received your PPP loan, spent the money properly, you're going to get, or you might have already gotten forgiveness from the federal government. But not all states are recognizing the forgiveness element of the PPP loan. Minnesota is one of them. And so there's a number of states out there that are taking the position that if you get forgiveness of that PPP loan, it's taxable income for state tax purposes. So you need to be aware of that, and particularly those folks that got high dollar PPP loans. There's businesses in the state of Minnesota and across the country that received tens or hundreds of thousands of dollars, up to millions of dollars in PPP money. I think the cap was $10 million for a PPP loan. So there's businesses out there, as I said, that got hundreds of thousands of dollars in PPP loans. And if your state does not recognize the federal law on forgiveness, that's going to be taxed as income under state law. So you need to look at that.
All right. So yet another pitfall that could really impact you, couldn't it?
Yeah, no question about it. Yep, absolutely. Now there's something else that's new that came out of the American Rescue Plan. Kerry, I have a hard time even spitting that name out. American Rescue Plan is such an oxymoron. But there was another program, yet another program that came out of that bill. So we've got three major federal giveaway programs now for businesses. The main one that everybody knows about is the Paycheck Protection Program loan. The other one that most people don't know about is called the Shuttered Venue Operators Grant, the SVO grant, and that's a grant available to live venue operators that were shut down. So folks that ran music programs, plays, theaters, all these types of environments that were shut down as a result of COVID can get federal grants, not loans, grants through this SVO program. And now there's another new one, and this is the Restaurant Revitalization Program grant. Again, it's a grant, not a loan. And that was authorized by this American Rescue Plan Act. And so we've got all kinds of these federal giveaway programs now, Kerry, that are going on. In addition to the expanded child credit, for 2021, the child tax credit has been expanded in a number of ways. First of all, the credit was raised to $3,000 from $2,000 to $3,000, and that's available for now children up through age 18. Prior to that, it was only available up through age 17. So now we got one more year of eligibility for children. That's number one. For kids that are under 6 years of age, Kerry, the credit is $3,600. and it's an advance credit. So that means starting in July of this year, the federal government's going to be mailing out half of that credit in the form of checks, just like what you call the stimmy checks. Here's another one coming in the form of the child tax credit that will start in July of this year and be paid through December. So if you're let's say you're a family with two kids under the age of 6, you have 36 and 30, that's $7,200 in tax credits you're going to get. And that's half of that. So $3,600 will be paid over that July through December period. The other half will then be claimed on your 2021 tax return. And they're not done with that one yet, Kerry, either. There's already a bill that's been introduced into Congress to raise that child tax credit to $12,000. That's $1,000 a month the federal government's going to be giving out per child under this program. I'm telling you, it's just unbelievable where this is going.
Yeah, it's amazing. Hard to believe that it's all come down to this. Hey, well, Dan, you've told us a lot what's coming down the pike. I don't know if it's any worse than what we've had already, but if people want to find out more about you, connect with you on the web, where do you go?
Yeah, you go to taxhelponline.com. That's taxhelponline.com. You can also follow me on all the social medias, Facebook, YouTube, Twitter, LinkedIn, all of that stuff. You can just check me out there. Taxhelponline.com is probably the one-stop shop for all the information we have available to folks.
Excellent. Well, I appreciate that. Thanks so much for coming on here again with us, Dan, and giving us a little clarity on the situation. Any questions for Dan? I will forward them off. Email me, kl@kerrylutz.com. Make sure you sign up for a free newsletter, financialsurvivalnetwork.com. Dan, we'll talk to you again real soon.
My pleasure, Kerry. Thanks for having me.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.